Dalal Street sees its biggest weekly gain of 2024 amidst volatility. The sensex and the nifty gained over 3% in what was a historic week. The nifty IT saw its biggest weekly gain in over 4 years. On this week's edition of the Editors Roundtable, we put the spotlight on what has been a massive week, the election week for the markets. In terms of sectors, we also look at the FMCG space and capital goods. And of course, the way valuation multiples are moving around and if there's a portfolio churn that perhaps is underway. We also talk about why Chandrababu Naidu is the most valued player this week. I'm Surabhi Upadhyay, and with me are Nigel D'Souza and Prashant Nair. You're with us on Editors Roundtable, and also with us on the show this week, we have Nilesh Shah, MD and CEO of Envision Capital. Guys, great to finally just say that, you know, it's over. This roller coaster mega week has finally come to an end. I can't believe it.
Welcome to the table.
I think I picked a good week to make my debut.
Surabhi's first time, not the last, but what a week, right?
Yeah.
And I think Nilesh, I don't know, we talk about a V-shaped recovery, but this is not a V-shaped recovery. This is a I-shaped recovery.
It's like this.
It's unexpected, absolutely, or was it expected? I don't know. I mean, today's move was just powerful beyond what anyone thought. And this at a time when FIs this week have sold some 18,000 crores in stocks.
3 days, it's 25,000 crores. I mean, counting day and the 2 days post. And for the full week, it's about 18,000.
Mutual funds have bought, but they bought about, what, 7,000 crores in cash. Actually, let me just put those numbers up for our viewers, if we can, just to kind of recap and jog the memory, because it looks like at the end of the week that we've lived through a lifetime, literally, right? It seems like a long, long time. So Monday's high after the exit poll reaction was, what, 23,340. That was the euphoric 3% pop that the Nifty saw. Tuesday, of course, was disappointment, long faces. The market fell, and the low there that day on Nifty was 21,281. And today's high, Friday's high is 23,320. So you basically were just, 20 points, 30 points away at the high point of the day from the all-time high. So that is the extent of the recovery that we've seen, and which means that we're actually up for the week. We're up from Friday's close substantially on the Nifty. Sectorally, a lot moved, right? CPSC, PSUs was, of course, the big worry point. But there was damage, but the index ended just 1.6%. It could have been any week, didn't have to be an election week. So, I mean, if you look at it like that, IT was actually the one sector which went unnoticed, under the radar. But I think that's what a lot of people went into. So 8% on the Nifty IT index. FMCG index, the immediate reaction was sort of money moving there, 7% there, auto index 7%, and the floors picture will come up. As I said already, 18 negative from FIIs and about 6,900 crores positive coming through DIS.
I think the market has a way of surprising, right? I remember all the chatter, and I think a lot of us also thought that maybe after this level of volatility, things will quiet out. And there was this chatter about whether the market will change into maybe becoming a bit of a boring space now, because the poll verdict is not, maybe in sync with what the market's best case scenario was. But it's very different.
Well, let's get Nilesh's view. Nilesh, sometimes post a big event, there's so-called this unsaid thing that domestic money is at play. And the big domestic money will support the market in the near term. But this is not support. The markets are up 2,000 points, in the last 3.5 days or so. How do you approach the market? Do you think on the Nifty, we're nearing the near-term peak and stock-specific action continues? Or do you believe even the headline index can move from here?
So, Nigel, I don't think we're near a peak.
Okay.
I still think the market has a lot in store for its going. I think step into a month from now, it's going to be totally event-packed. The expectations around the budget, the monsoon, the earnings season, all of that. And I still think all of that still is more positive than kind of negative. So I actually believe that this election verdict will ensure that the government in its third term will actually bring even a bigger focus on the economy. I think that's going to be the very big focus. 2 large states will have a very important role to play. That's going to see a huge amount of spending on infrastructure. I probably think also the concerns around, the government straying from the path of fiscal consolidation might be overdone. That may not necessarily happen. So I think on the whole, I still think that there's a lot which the market has for its going.
Let me just play the devil's advocate for 1 second, right? Friday, if you were speaking last Friday and you spoke with foreign investors, they would tell you that India deserves a premium because there is so much political stability here, and that is expected to continue. There is political stability even now, but maybe a slightly weaker market looks at incremental stuff, right? Not the absolute, but the incremental change. Now, the incremental change politically is slightly to the downside, not to the upside, right? You'd agree with that, Nilesh. So does the market need to price that in some level? Because sitting this Friday as compared to last Friday, that political continuity dividend will be higher or lower?
See, I think concerns of the FPIs have been more around valuations. I think their bigger challenge is not so much about political stability, where there's more of it, less of it. It's been about valuations, because they continuously compare India with the entire emerging market pack. And they say, what's China trading at? What's Russia trading at? What's Taiwan trading at? And optically, all of them look so cheap versus India. Okay? So I think my interaction with them has essentially conveyed one thing, that they're just waiting for some correction in the market. I think whenever you probably see maybe a 5 to 10% correction, they will come in big time. Okay, so I'm honestly less worried about that. I think what we really have to now just focus on for the next few weeks is essentially what are the priorities of the new administration, the new government. I think if the signaling is fine, the signaling is correct, it's on the right trajectory, I think this bull market has many legs to go.
But, Nilesh, just on that point of, will FPIs come in or not, technically they got that 6% drop on counting day. Maybe it was too sudden for people to sort of make up their minds on what to do. But we're back to the valuation question, right? Because we're again talking on this Friday at, virtually at all-time highs. And the same question, how much is really left on the table if you're going to buy stocks now at, 60, 70, 80 PE? What's the thought?
So Surabhi, if you look at the entire valuation kind of paradox, you still had the IT and the FMCG, which was not firing earlier, okay? And where valuations had become a lot more reasonable versus where they were maybe 2 years, 3 years, especially for the FMCG pack. IT has been reasonable, the challenges have been more around growth. I think that's really the two pockets which probably can fire a lot more, apart from, of course, the entire private banking space. So I still think that if they wish to really take that call, I still think there's kind of a lot of room for them to invest, pick their chosen sectors and really come in. The other thing, of course, is that I think the faith of the domestic investors continues unrelentlessly. I think that's there, that's on, they continue to be committed. I have not heard anybody wanting to pull out money out of the market or essentially back out on their SIP commitments. That's not something which one has really heard of. So as long as also the domestic investors continue, I don't really see a challenge from a liquidity point of view to this market.
That story that Yash did, Nilesh and Nigel, basically on Tuesday when the market fell, mutual fund orders which people put in were not executed at the NAV of that day, because if you put orders in before 2 o'clock, you should get that day's NAV. So on Tuesday, market was by 2 o'clock was already down 1,700, 1,800 points. And the data suggests that, and this is from brokers, large brokers, that number of orders were twice the usual to buy mutual fund NAVs. I mean, it kind of tells you, I mean, this sort of supports your point, which is that local investor interest in the market on dips remains very, very high.
And Prashant, the right parameter to probably look at is what was the month-end cash holdings of mutual funds on May 31st. Maybe some of them got fresh subscriptions but chose to be in cash on the eve of the election results. Okay, probably they were just kind of hedging for an event. So I think that might just be a very interesting data point. If that data point just shows that there was probably 20, 30, 40,000 crores of just cash lying to be deployed, who knows, that deployment is happening post the event.
Okay, all right. Nilesh, let's focus on a couple of sectors and themes as well. Well, there was a time when the FMCG stocks, they traded at 70 times. And capital goods, well, they sell between 18 to 25 times odd sort of multiples. So tell us, how has this panned out? Now this week the FMCG stocks came back in style.
Exactly. So, I mean, I was just looking at a lot of notes, because the debate the entire week has been about whether you need to shift your portfolio, whether you need to unload a little bit of capital goods, or basically economy facing. So I took up capital goods as one particular pocket. So the whole debate was whether you should be unloading of PSUs, unloading of capital goods, manufacturing, infra, and moving towards defensives. And we saw that on Tuesday. There was this massive rush for safety. So anyway, let's talk about valuations and how these numbers have absolutely converged. It's been a story, a study in itself. So these are numbers FY26 for some of the prime capital goods stocks. And many of them are, of course, MNC companies. So ABB is right at the top of the pack, 92 times. Hitachi Energy, 78 times. And look at the corresponding moves in stock prices. Valuations are up because these have become growth stocks. At one point in time, they were value stocks. But look at the appreciation. Hitachi Energy is up 163%. Siemens and CG Power, they've done really well. 80%, 90% growth in these stocks in the course of the last 1 year. Thermax, 127%. And look at GE T&D, 535%. So valuations on these capital goods names, which are many of them are MNCs, they're ranging anywhere between 50 times, going all the way up to almost 80 times for some of the names like ABB. Now, contrast this with FMCG. FMCG was the original sector that would trade at, 70 times. Those were the heydays of, the staples era. But now that's changed. So Nestle is the one that's, if these are FY26 numbers, by the way, that I looked at. So about 60, 61 times on Nestle makes it the most valued stock. Godrej comes in at a second at about 50 times. Lever, so these valuation multiples, they've been trending down. Lever itself is at 50 times. They're obviously at a discount to what the historic averages were. Colgate at 48 times. And look at the stock price performance. Lever hasn't moved, throughout the year. The others are up anywhere between 7-8% to about 11-12%. These have done a little better. Marico, for instance, slightly better. But even here, the valuation multiples have all come down to the 40s, mid-40s. And it's the capital goods space where the valuations have moved up to 80 times. And that's the change that we're talking about. Whether this event that happened, whether that offered a bit of an opportunity for a reset. And, Nilesh, that's really my question to you as well. Now, it happened too quickly. The bounce back also was very, very swift. The whole correction in this space lasted for almost just 1 day, 2 days. But what would you be doing? Do you see more valuation comfort in stocks in the FMCG arena? And would you become a buyer over there?
Oh, yeah, absolutely. I wouldn't kind of necessarily allude to just FMCG, but the overall consumer space. The consumer space has been good. Pockets of consumer space have been good, particularly the ones around premiumization, not necessarily the staples, but the non-staple side. That's essentially been the sectors connected with lifestyle, changes in lifestyle, alcoholic beverages and that kind of space. I think that's been doing very well. There was a correction that we saw even in those pockets, and I think that gave a good opportunity. I still believe that the growth is very strong in those pockets, and the valuations did get reset temporarily, and so that creates the opportunity. Regarding the big consumer staple names, I think they will still continue to enjoy tailwinds because of this whole, a bit of the risk of trade that is kind of playing out. Crude is kind of sobered down a bit, which will drive margins. And then, of course, if the rural spending comes back, you would see this sector having some slightly better earnings growth.
Will it be at the expense of an ABB at 92 times or a Siemens? Or a BHEL for that matter. Some of the brokers started pruning their estimates, and there were some downgrades that came in through the course of the week.
I don't think the earnings slowdown is going to happen with capital goods.
Okay.
I still think that is going to continue. I think what we saw between 2019 and 2024 is something which is going to extend beyond 24 as well. I don't see the focus on infrastructure coming off at all. The focus on energy, the focus on cap goods, the focus on manufacturing, I don't see that kind of coming off in any kind of a way. If at all, it will gather momentum. So if you flash back to 2004, when we saw a bit of a similar situation, huge correction in 2004 for that 1 day, 1 week.
Yeah.
But after that, from 2004 to 2007, you saw again a mega bull market, again in the same cap goods, real estate, infrastructure, power, energy space.
We all remember that, yes.
And I wouldn't be surprised if history repeats itself.
Wow.
All right, we'll take a quick commercial break on that note. We come back and we decode the week in some more detail. We'll ask Nilesh what he did this week as well, right? The Chandrababu Naidu sort of theme played out, stocks played out, and Nigel has been talking about this all week. So we recap some of that as well. We're back with that.